So in today's video, I'm going to make you to understand the financial and the stock market situation on Iran. Today's video is not going to be on a political aspect of my view on Iran, but I'm going to go deeper on the analysis and what has been happening on the global market when it comes of Iran and the world.
What we're witnessing right now with the United States and Israel's war in Iran, it can only be described as a criminal act by the United States and Israel. And the question is why? And it just appears that this is a desperate attempt to destabilize not only Iran, but the region, and also to destabilize the global system, much like Germany did in 1938. They destroyed the current system of international law. That's what's happening today. And the United States has proven and demonstrated even before this, in the months previous with their attack on Venezuela, that they want to disrupt and to end the system of international law and international norms in an attempt to reestablish a new order whereby their allies will be or are vassal states. But this will be a new order led by the United States and Israel globally, with a very small number of people profiting from this conflict, and then the reordering of the international financial system, which will benefit a very small number of people. That's the bigger picture. I think that's what we're seeing.
Something unusual is happening in the global market. Despite rising geopolitical tension around the Iran, global investors appear surprisingly calm. Stock fluctuate, oil price surge, yet many traders believe the situation will stabilize. But here is the real question nobody is talking about. Nobody is asking about all this question. What if the market is wrong? Because right now, many analysts believe that the stock market has already priced in the escalation. In other words, what I believe is that investors believe the crisis will calm down, but if that assumption turns out to be wrong, the consequences could ripple through the entire global economy, which is what is already happening in today's world. Tonight, I'm going to break down the story behind the market, the oil routes, and the hidden risk that could trigger the next wave of the volatility. The story begins with rising tension in the Middle East. Market reacts almost immediately. Oil price surge as traders fear disruption to global energy supply. In fact, crude oil jumped from 10% in a single trading session, sending shockwave across the financial market. Stock market react too. Major indices fell as investors try to understand how serious the situation could become. Why? Because the global market knows something important that is coming. When geopolitical tension involves energy supply, the entire world feel it. That is what is happening between the war of Iraq and the United States. There is no country that this war is not affected based on their commodity, or maybe the inflation rate, or the oil price. In one way or the other, this war is affecting everybody. To understand why the market reacts so strongly, you need to look at the geography. Right next to Iraq sits one of the most important shipping routes on the earth. It's a narrow waterway connecting the Persian Gulf to global markets, but the narrow passage carries something incredibly valuable: oil. Nearly 20% of the world's oil supply pass through this route every single day. That means if this ship land in disrupted, energy price can surge almost instantly. Tankers stop moving, supply chain freeze, and suddenly the entire global economy is at risk. Practical, simple. As tension rise, energy market react first, and the reaction can be dramatic, honestly. Recently, oil price surged to $90 per barrel.
And we all know that Saudi Arabia is the largest oil exporter in the world. So if Saudi Arabia is even putting out vague threats, then oil markets will react. We're seeing that WTI crude over in the U.S. is trading up about 0.5% to around $72 per barrel. And we're also seeing that Brent crude internationally is trading around $81 per barrel, up about 1%.
All right, global markets, I know, coming under some pressure both in Europe and in Asia overnight.
Yes, absolutely. So in the morning, this morning, it was looking like it was going to be a day in the red, and markets all across Europe were down after Asian markets were down sharply. However, European markets have rebounded a little bit, and we're seeing that in general things are a little bit flat right now in Europe. But we are also watching the pound as UK Prime Minister Theresa May is about to speak in roughly an hour to give an update on Brexit. And so the pound was down sharply this morning as there's concerns about a breakdown in Brexit talks. And now it is up on the hope that maybe she'll be saying something good about Brexit.
All right, well, of course, here in the U.S., we're all talking about Sears. They're filing for bankruptcy. But I know over by you, you're watching another mega retailer, Superdry. What's going on there?
Superdry shares are actually down 20% today after the company warned that very warm weather has really hurt its sales. People just aren't buying all the sweatshirts and the coats that they would expect in September and October. So that is what's going on with this profit warning, and shares are down 20% today. Overall, year to date, they're down 60%.
Through the Strait of Hormuz could be disrupted. Some analysts even warn that if the conflict continues, oil could climb towards $120 per barrel or even higher. Why does this matter? Because oil price influences every transportation cost. In food price, manufacturing, inflation, when energy price spike, economy slow down. And that's when stock market begin to worry. As oil price jump, stock market become volatile. Major index drop hundreds of points in a single trading session as investors try to calculate the economic damage. Energy company often benefit from the rising oil price, but other sectors struggle. Airlines face higher fuel costs. Manufacturers see rising expenses, customers pay more for energy, and suddenly investors begin asking a simple question: how long will this crisis last? This is where things become interesting. Many investors believe that the crisis will calm down, which the way I'm seeing the war between United States of America and Iran, I don't think this is getting for a peace talk at all. In the financial aspect, they say the escalation is priced in. That means market has already assumed the conflict will stabilize. Traders expect diplomacy, negotiation, or political pressure to prevent a major escalation, because historically most geopolitical crises eventually cool down, markets recover, and investors move on. But there is one problem with the assumption: markets do not price in what they cannot predict. The real danger lies in uncertainty. If tension escalates further, if oil shipping are disrupted, or if regional conflicts spread, markets could react volatilely. In fact, disruption to the Strait of Hormuz could remove millions of barrels of oil from the global supply. Some forecasts suggest oil price could exceed $100 per barrel if shipping routes remain blocked. And if that happens, inflation could rise again, central bank could delay interest rates, economic growth could slow, and global stock market could fall sharply. Investors around the world are watching three key signal oil price: shipping activity in the Strait of Hormuz, and a diplomatic development between major powers. because in modern markets, event in one region can move trillions of dollars across the globe. What begins as a regional conflict can quickly become a global financial story. So the big question remains, has the market already priced in the best case scenario? No. Or is he underestimating the risk ahead? Because sometimes the biggest danger in financial market is not the crisis everyone sees. It is the crisis no one believes will happen. And if the current assumption prove wrong, the next market reaction could be far more dramatic than in the first. If you found this video helpful, please hit up the subscribe button, like and share this our channel, because in today's world, understanding geopolitical is not just about politics. It's about understanding the markets that shape the global economy. I'll see you on my next video. Thanks for watching.